Gold just passed $2,000 an ounce, setting the stage for a historic new bull run. Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. So find out why and get instant access to his #1 gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using the same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to 2022goldmania.com. Again, that's 2022goldmania.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Well, the war in Ukraine has sent the price of everything from oil and gas to wheat and metals skyrocketing, sparking inflation fears and threatening global growth. That's driving retail investors everywhere from Singapore to New York to the safety of gold, which helped spike the metal to over $2,000 an ounce. That's close to the record reached during the pandemic. So gold dealers have been swamped by calls for people looking to get into gold. Here to give us the lowdown and the inside scoop of what's coming up is Mark Yaxley. He is the managing director over at Strategic Wealth Preservation, SWP. They are a bullion dealer and storage provider based in the Cayman Islands. And as a special treat, he is in the actual vault today in Cayman. Mark, good to see you from that beautiful vault of yours.
Glad to be joining you from inside the vault, Daniela.
And before we start, you're looking like Donald Duck's rich uncle. I can't remember his name right now, with all that gold behind you, beautifully stacked. Thank you for putting that together. But how much gold is that right now?
I think based on today's spot price, somewhere around $200 million US.
Wow. That's a lot of zeros. All right. Well, we're going to talk everything from premiums to demand and what's driving it. So first and foremost, I know that gold bullion dealers right now have just been swamped with calls to the various people I've spoken with, including yourself. So I want to know, when people are calling right now, there's no shortage of concerns. I mean, what are their main fears and worries, and why are they looking at gold right now?
Yeah, definitely. It's not a period of time where precious metal dealers have to convince people that it's a good time to invest in gold. I think the case is pretty strong. You'll remember that obviously the Canadian Emergency Act was a driving force before the Ukraine crisis began. So we saw an uptick in Canadian clients, over the last month or so, followed by the invasion of the Ukraine, which is obvious. Any major geopolitical conflict is a major driver for gold. We saw the all-time high reach for gold recently. So there's that event. But I think underlying all of that is still the inflation concern. That's the unanswered question. The Fed is just starting to deal with that issue now, but we've been a little bit distracted by, Canadians, at least by the Emergency Act, and then obviously the invasion in the Ukraine.
And that's what I'm hearing from a lot of folks. I mean, the emails I get, people feel that by leaving money in the bank right now, given the current rate of inflation, it's like their money is slowly dying. They're actually losing value on their money. So are you getting a lot of first-time buyers of gold?
Yeah, it's interesting. I was actually just talking to the sales team yesterday, and they did point out that we're getting a lot of first-time buyers, probably more so than we've ever seen, kind of a glut of first-time buyers. And I think there's two driving factors there. Number one is obviously the inflation concern. So any money that you have sitting in the bank is basically losing value. That affects everyone. But also you have the Canadian concerns. These Canadian investors, due to the Emergency Act, they're worried about the banks actually confiscating their money. And I don't want to spread speculation, but what we've seen over the last couple of days is actually Canadian banks are giving their clients a very hard time when they're trying to wire money to SWP. So that's something that's very new for us. We receive money from all over the world every day, and the Canadian banks are actually telling their clients that either SWP is a fraudulent company, or they're making them go through extra due diligence just to send their own money out of the bank. And I think that's the banks reacting to the crisis they've been facing in Canada over the last few weeks.
And that's spilling over because I feel that's a concern of Americans now, is that they're looking at what happened in Canada and they're now thinking, well, could this happen here?
And I believe the UK also recently passed legislation that would allow their government to do something similar to what the Canadian government did due to the riots and protests in Ottawa. So yeah, these are things that I think gold bugs have always been concerned about. You know, these are things that Doug Casey has always talked about, but now it
Yeah.
actually is a reality and it's affecting people.
Yeah.
And obviously they're very concerned and trying to get out of the banks.
It's interesting because I just got off the phone with Doug Casey before I hopped on this with you, and he was telling me again, like, this is where gold shines. Like, sorry for the pun, but this is the moment where you don't want to miss out on gold. So that said, let's talk about premiums. What are you seeing in terms of premiums? Because I know on the silver front, I heard they're skyrocketing here.
They are. I mean, premiums, I've said this before, Daniela, to you, premiums don't lie. They tell the story of the underlying demand for physical precious metals. It is the truest indicator of how much demand and maybe a struggle on the supply side that there is within our industry. And premiums are as high for certain products as I've ever seen in my 16 years career. We talked about Silver Eagles before the show. Wholesale premiums, wholesale cost to a dealer is about $10 US right now. So the retail investor is paying like $12 or $13 over spot for their US Eagle coin. So I would just caution investors, be very selective about the type of products that you're investing in. It is a great time, like Doug said, to own gold and silver. The case has never been stronger, in my opinion. I tweeted that the other day. But you need to be selective and don't overpay when there's opportunity, maybe with some other products, to save some money.
So before we get to some products, because I know you want to show us and walk us through some things to think about right now. What do you say to the folks who are like, well, with gold nearing $2,000 an ounce, we passed $2,000 an ounce at one point. Is it too expensive to get into gold here? I'm waiting for a pullback. What do you say to those folks?
Well, I'd say the pullback's already happening. I mean, gold, has come back off that $2,000 mark significantly. The US dollar is strong right now. You have the treasury yields that are strong. So that's putting downward pressure on gold. There's also some profit taking that's been happening. But you've got, forget the Canadian situation. That is fairly minor on the global scale, but you have major inflation issues that you're dealing with. And the conflict in the Ukraine, there are peace talks that are undergoing, and all of us hope there's a peaceful resolution. But this conflict is going to disrupt Europe. You've got China and the US, that are going to start going at it. That's already escalating. So again, the case for gold is very good. I don't think it's ever too late to own precious metals. I think people should allocate a certain percentage of their portfolios to precious metals. And if the last 2 years has not taught you that, you have not been paying attention. You've got COVID, you've got a war in Europe. Anything can happen in this world. That's why you need precious metals to balance your portfolio correctly.
And well, I also want to talk palladium, because I know you've been a long time bull and fan of palladium. You finally had your moment there.
Yes.
Over $3,000 an ounce. I thought of you when I saw those prices. But let's talk about some of the products that clients are looking at. What's hot right now?
What's hot right now? The best sellers don't tend to change that much. The 1 ounce gold maple leafs are selling like crazy. We can't keep enough of these guys on the shelf right now. It's really good value in terms of 1 ounce products. Obviously, the kilo gold bars. These are the type of products that investors who are coming in for $100,000, $200,000 tend to buy. It's the lowest premium product that is still, I would say, affordable for a retail investor. If you can get your hands on decently priced 100-ounce silver bars, that is starting to become a struggle. The mints are already, selling out of these products. The premiums on these are rising, but still a much better deal than those 1 ounce Silver Eagles. So if you can get your hands on 100-ounce silver bars, those are quite popular right now. The other two guys that I have on the table, Daniela, doing this more as kind of a fan treat than anything else. But I wanted to take out a 400-ounce gold bar. This is not something that everyone, unfortunately, including myself, can afford. But
she's a beauty, though.
She's a beauty. It's 30 pounds of pure gold. This one was minted by Johnson Matthey. And it's a really quite an amazing thing to hold on to. It really makes you realize how valuable gold is, the intrinsic value of the product. And I'm not even going to try to lift up the 1,000-ounce silver bar, but another product that investors, this 1,000-ounce silver bar probably running right now at about $26,000 US, $27,000 US. That's not too big for certain retail investors. So if your dealer that you're dealing with can get their hands on these, that's a good way to save premium as well.
And I just want to bring up, I had a few folks write in with some questions, Mark.
Sure.
Um, and there's one this one comes up a lot. I wanted to ask you. A viewer writes, can you explain how we can use our physical gold when we need to? I.e., how can you buy food with it? Do I have to find a gold dealer to cash out? Why hold it if I don't know how to use it? Help. Thanks. Love your show. Thank you. So that's a common question. They're like, okay, I'm buying gold, but then how do I use it? What do I do with it?
Yeah, unfortunately, you can't go down to the local grocery store and trade in your gold eagles or gold maple leafs for food. That is true, but I think the underlying question, what that person is trying to get at, is the liquidity. How easy is it for me to sell my gold that I'm holding, or whether it be in a vault? And the answer is gold and silver are extremely liquid. As long as you have a relationship with a reputable dealer, and most mid-sized towns in America or Canada or Europe will have a precious metals dealer or someone who's willing to make a market. As long as you have that, you're going to be able to trade your gold and silver for cash, which you can then use to go and buy food. But if your underlying concern is having proper like food storage, then you should invest in durable goods that you can keep at home. That would probably be step one. And then the gold liquidity, you're only going to want to sell your gold or silver in an absolute pinch, I would say.
Let's talk about, you mentioned Johnson Matthey before. That's a good point. Does it matter who's minting it? Does that make a difference, Mark?
I mean, it does affect the total spread that we've talked about before, Daniela, on certain products. Some brands will have tighter total spreads. For example, the Royal Canadian Mint products tend to be a tighter total spread than the US Mint products. But we're getting into a market now where fulfillment times on orders are about 3 to 5 weeks. There's a lot of metal in this vault, but there's not a lot of available inventory in this vault right now. We have to bring that in from our suppliers, and the suppliers are falling behind due to all the demand that's been building up over the last few weeks, all the orders that they're facing. So in terms of brands right now, you kind of want to get your hands on what you can get for fulfillment, and it becomes a little bit less of an issue than maybe it usually would be.
And I'm just thinking, to that, going back to that viewer question, made me think of something. Is that, I understand these obviously, you want to have maybe some gold, close by in possession, or silver. But wouldn't an advantage of being in a custodial program, in a storage program, be that I'd be able to sell it much quicker if it's there?
Yeah, exactly. There are certain vaults like our own that offer liquidity to their clients. So you can just pick up the phone or trade
Right.
online, send an email, and you can sell your material, in real time, and take that cash or that bank wire within 24 to 48 hours. So that's the kind of storage situation you want to be in. If you're going to go into storage, the bank safe deposit box does not offer you that option, and certain vaults will not offer you liquidity, but there are a series of vaults in the world that do, and that's really ideal. It's a little bit like a bank account where you can add and withdraw your precious metals as needed.
I want to talk about the American Eagle for a second. The silver American Eagle, Mark, obviously one of the most popular coins. The premiums, we're talking premiums near record highs. So is that, I mean, when a client calls and is looking at certain products, and if they're like, well, I want the American Eagle, I mean, should they not be looking at maybe another product with perhaps a lower premium right now?
In my opinion, Daniela, they should be. I mean, I love the look of American Eagles as much as the next guy, but I cannot justify paying, a 30% premium over the spot price for silver. It's just not a good investment. Mind you, they do have a very good buyback price right now. That spread is not fully, it's not $13. It's probably closer to $5 by the time you sell it back to a dealer. But there are other options like the Maple Leaf, like the Britannia, like the Philharmonic, these secondary kind of coins that are half of that premium, if not less. So you definitely want to be asking your dealer and looking at their web pages for alternatives to those very expensive American Eagles.
Very good insights. And Mark, I'm going to ask everyone to hold still, because we're going to actually switch over to the testing station now. Mark's going to get up and show us how to test metals to see if they're real or not. That's a common concern and question that I've been getting. So he has agreed to walk us through that process. Thank you. That will be part 2 of this video. But before I let you go, can I share with the folks that you guys have been so busy, just to put things into perspective here, that you're building a second storage facility? That's insane, because I've been at that one and it's huge.
Yeah, I mean, we've been going at it for 8 years. I think originally we had planned to fill this in about 10 years, so we're right on track actually. But yeah, the truth is we are in the planning stages of our second facility. We have to acquire the land and build a new facility that'll be about 3 times as large as this one. So it's pretty exciting for us. Still a few years away before you can come and visit us and hopefully do the unveiling at that time. That'd be pretty cool. But
It's true because I was at that unveiling, so I'll definitely be at the second
that's
unveiling.
right. You were, yeah, totally.
All right, so folks, hang on, stay tuned for part 2. We're going to be testing some metals. You don't want to miss it. Mark, thank you so much.
You're welcome.
And thanks for watching part 1 here on Stansberry Research. We'll have part 2 coming right up. In the meantime, don't forget to sign up for Premier, access to content you can't get anywhere else at DanielaCambone.com. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.